Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Hello and welcome to the Bitcoin Bulletin, your source for all things crypto. I've got some interesting news today that's going to make you rethink how you view Bitcoin as an asset. Some folks have long believed that Bitcoin is essentially digital gold, a safe haven investment that stores value like traditional gold. But let me ask you this, if that were true, wouldn't we see more of a correlation between the price of Bitcoin and that of gold? Not exactly, according to recent trends. The first quarter of 2025 has been marked by rising growth fears, inflation expectations, and heightened stagflationary risks, largely attributed to Trump's tariffs policy. But what does this mean for our trusty cryptocurrency friend, Bitcoin? Bitcoin has often been cited as a hedge against inflation, but surprisingly, the actual drivers behind its price movements reveal a different story altogether. It appears that Bitcoin behaves like any other risk asset, stocks and bonds included. The stock market's main driver is growth expectations. When we have positive growth forecasts, you can also expect higher earnings in the future, which directly impacts stock prices. Similarly, when investors perceive greater default risk for corporate debt, their demand for those bonds increases relative to U.S. Treasuries, as evidenced by widening credit spreads. In simpler terms, if there's uncertainty about a company's ability to pay back its debts, or if economic conditions are deteriorating, the price of those bonds goes up compared to risk-free government bonds. And it looks like Bitcoin is following suit, showing correlation with stock market trends rather than being an independent asset class. To illustrate this point, let's take a look at the chart that compares S&P 500 to Bitcoin prices over time. While there are instances of short-term divergence and changes in magnitude, the overall pattern suggests that growth expectations and risk sentiment play a significant role in moving both assets. Interestingly, when looking at gold, often seen as a safe haven asset like traditional gold or even Bitcoin itself, we notice it's been on quite different trajectory. Gold has risen by over 18% this year alone, while Bitcoin has taken a hit, down more than 12%. What could be the reason behind this disparity? Well, gold is primarily driven by real yields, not just inflation expectations. When real interest rates fall and people expect better growth ahead, it generally leads to rising inflation expectations, which in turn sees gold prices go up. Conversely, when real interest rates rise, gold falls less than we'd expect given its historical performance. This isn't a coincidence. There's actually a strong correlation between gold prices and real yields that hasn't entirely disappeared. To further understand this relationship, let's look at the chart showing gold and real yield movements over time. The correlation remains robust. When real yields fall, gold tends to rise. Conversely, when real yields rise, gold falls less than expected. Now we're in a tricky situation where inflation expectations are rising while growth forecasts get revised downward, leading to stagflationary risks. This environment is particularly good for gold and risk assets, as it means the real interest rate has fallen, making people expect better growth ahead. However, in our current market conditions, with inflation expectations on the rise and growth forecast revisions coming down, we're experiencing something quite unusual, a scenario where real yields fall in bad economic times. Gold rises here, but risk assets like Bitcoin go down. So what does this mean for traders? If you don't know what drives your investment asset, trading it becomes nearly impossible. It's crucial to understand the underlying drivers that impact our beloved cryptocurrency, and today we've highlighted some surprising similarities between Bitcoin and traditional assets like stocks and bonds, but also their differences with gold. That is all for today's episode of the Bitcoin Bulletin. Thanks for joining us on this thought-provoking journey into crypto.